Hello everyone, welcome to Officer 24/7. My name is Niharika Walia Bhatnagar and I'm with you with the area of AFM. Now we are heading towards the next and a very important area. Acha, I am just a correction. We have started officially the module D. Acha, what is in the area of module D, everyone? In terms of module D, we are dealing with the topic of taxation. Acha, this particular topic is super duper important. Why do I say this? Because taxation is something which is super important, as this is not only important for your examination of JIIB, but this is super important for your practical life as well, because we all are earning, we all have to pay tax. So when we have to pay tax, we need to understand taxation from that particular point of view. So it's always better that we actually understand this part of taxation in such a way that it is helpful in our practical lives as well. Acha, along with this, everyone, if you like this particular session, please go ahead and share this among your peers, because a little effort from your side would definitely be appreciated, and definitely we're looking forward to it. Done, everyone? Okay, now comes the next point. Let's talk about it. In terms of taxation, where were we? Here comes the first question. For whom is it mandatory to file income tax returns, everyone? Who is it? Only the residents, only the non-residents, और वैसे तो खैर only non-residents is just not possible. For residents, NRIs with gross total income exceeding the threshold, only for companies and firms. Always remember, anyone, there is no specific area. Companies are required to file their returns. Firms are required to file their returns. They don't have a threshold limit there. For residents and NRIs, the gross total income exceeding the threshold is there. This is not for only. The only term is wrong. It is there for all the residents of India as well as the non-residents. Anybody who is crossing the minimum limit. What's the minimum limit, everyone? The minimum limit of taxation is 2,50,000 rupees. Okay? For individual who is below 60. Someone who is above 60 up to 80, they are covered under rupees 3 lakh. And then above 80, they are called senior citizens. I'm sorry. For them, it is 5 lakh rupees. Done, everyone? These are the 3 slabs for individuals who are residents, everyone. This is for you and me because we live in India, you know. Then the people who are not residents of India, then for those non-residents or anybody else, okay, for them the slab is 2,50,000 flat. There is no age benefit for them. The age benefit is only for Indians. Okay, so this is the concept. So in this case, the correct answer is it is for residents and NRIs who are exceeding the threshold limit. Take a moment, everyone, and note this down if you want to, or you can actually download the PDF of the same as well. You can download it in the, you can go ahead and download the app first, and through the app you can review the PDFs of all our classes. So please do the needful, because it is important that whenever we are studying, you are able to do it. Done? Chaliye, now let's move on. The topic was for residents and NRIs with gross total income exceeding the threshold. Now, second point, everyone. In which situations is it mandatory to file income tax returns? When claiming an income tax refund, when carrying forward a loss under the head of income, when having an asset or financial interest outside India, or all of the above. Acha, everyone, mandatory means it is compulsory. For whom it is compulsory to file the returns, everyone? When you are claiming the income tax refund, till the time you don't file your return, how will they come to know that you have paid tax? right? Then when carrying forward a loss under the head of income, whenever you have losses, you have to file your income tax return in time. If you are filing it after the due date, then it's of no use. When having an asset or financial interest outside India, it is compulsory for anybody who's residing in India, though he might be less than the threshold limit, but has some interest in India, interest outside India. They have a foreign property, they have some foreign assets in terms of some deposits or anything outside India. Then you have to file your return. You have to specify your foreign income. ठीक है, be it be something which is taxable and which is not taxable. That's a different scenario. Let the income tax department decide that particular part, right? But overall, when you talk about there are foreign investments now, all the foreign investments have to be stated. It is compulsory. The answer is all of the above. ठीक है. Then comes, when can a person revise their income tax return if the return is found? Everyone, oh, if a mistake is found. Acha. Okay, the first point is anytime during the next financial year, within the next 5 years, or within the prescribed time limit, or after receiving the notice from income tax department. वैसे ना, when we talk about this, when you have a specific return, you have a specified prescribed time limit. First of all, the most important clause is you can revise your return only and only if you have filed your original return in time. If the original return was filed in time, only then this particular return will not have any problem. Okay, but if you found any mistake or the income tax department, then they can describe the limit. Within a limit of within the prescribed time limit, you have to file it up. Okay, so right now the revision or the belated returns, everything is can be done at a certain prescribed limit. The limit has been decreasing over the period of time. It was earlier that whenever you file a return, then you have the time till the 31st March of that assessment year if you want to revise that particular return. But now they have reduced it to 90 days. So that's why, since the amendments are being made in this area every now and then, so they have said that when we talk about this area, it's the prescribed time limit. Which form of income tax return is applicable for the assessment year 21-22, financial year 2021? Actually, na, we have done this. This is from the book itself. Na, they can actually change it from 2022 to 2023. The financial year should be changing as well, because this year the new syllabus has been there, and the Macmillan book can give a different question, because currently the budget is not out. So once the budget is out, they can make amendments. But there hasn't been much of an amendments in terms of the ITR there. So in this case, the answer would be ITR 1 to 7. Okay, when we talk about ITR 1 is for individuals. ITR 2 is also for individuals. ITR 3, 4 is for organizations which are the businessmen is ITR 3. For partnerships, it's ITR 4 and ITR 5. Then ITR 6 is for the companies, and ITR 7 is for the NGOs. So whenever you and I are filing a return, we will be filing ITR 1, or also called ITR Sugam, ITR 1, ITR Sugam, and there was ITR 2. These three ITRs, matlab ITR, this is actually called ITR V Sugam or ITR 1, which is for a person who is only, he has salaries and he also might be having some FTs or something, because you are earning now, then you obviously have some savings as well. So salary plus your additional returns on savings. All those are covered under this. Okay, if you're doing anything for your family, anything which is tax deductible would be also be done. For example, you get your insurance done, you get your children's insurance done, your sons or your daughters or your husband's insurance done. Then what will happen in this case? Your spouses, then they are also considering that part in this particular area in the tax saving. Okay, which is covered under 80C. So they are covering ITR 1 and 2, 1 and 2 specifically for you and me. ITR 2 is for the complex returns, which has multiple income as well. House property hai, then they have bought or sold some kind of land or something. Then for all those people who have complicated sources of income, then it is always better to go for ITR 2. What is the difference between taxable and the accounting income, everyone? Taxable income is the income on which income tax department puts tax, and accounting income is the income which is as per the ROC, that is Registrar of Companies. So in this case, what happens? Because obviously the Companies Act and the Income Tax Act, they don't go hand in hand. This is accrued difference, temporary difference, permanent difference, or taxable difference. See, if the laws are fighting with each other, na, you don't stand anywhere. I don't stand anywhere. Nobody stands anywhere. In this case, nobody can be taking care of anything in this case. This is a permanent difference which cannot be hindered at all. है ना? Think about it, everyone. There is no excuse to it. It's a permanent difference. Next, what is the method used to charge depreciation on the machinery for accounting purpose? Double declining balance method, straight line method, units of production method, or sum of years digit method. In terms of depreciation, somehow only these are there are many different methods, everyone. These four are not the basic depreciation. So if I look at the different methods given to depreciation, they would vary. Done. So now these are the methods, but when you talk about depreciation, which particular part is recognized in terms of depreciation? Nobody is recognized and derecognized. In this case, when we charge depreciation, they have a flow chart for it. There is a flow chart in which they specify percentages for different assets plus for and for the this is flow chart is related to the area of taxation difference plus in terms of the working. Now depreciation is charged in such a way that the businessman can in the form of the working, in terms of the businessman, when they have their own houses and they sell it, that is a part of the asset which is being sold, that is capital gain would be charged on it. And if you're charging capital gain, depreciation is also a levied. Now depreciation is levied because the things are used in the market. You know, we are using it in our business. So if we are using something in the business, then we are bound to charge the depreciation. And pata hai, the depreciation has already been fixed. The depreciation which is fixed by the Income Tax Act 1961 is something which is a slightly different one, because in terms of the income tax which we follow currently follows the same accounting year. Done. So in this case the correct answer is straight line method. Done. In this case the correct answer is actually straight line method. All other methods are not, they are used in accounting but not in this area. Done? Done? Now let's move on to the next question. Okay, then comes the next question, everyone. What's the next question? The next question is, which one of the following statements is not correct? Which one of the following is false? Done. So when we talk about this particular taxes, internet, this is based upon the Indian government followed a specific model of the which of the following is true? Now, income tax is a direct tax. Yeah, it is a direct tax. Second point is, income tax is the same for individuals and companies. No, it varies. You and I, we don't have the same. If you're a company, then I'm an individual. And slab goes up, then till then we are at the same level. Then when we talk about the income tax is different in object in terms of the income tax is different for domestic and Indian foreign. Now when we talk about this particular area, the former for income tax return is different in case of different classes at at different classes of assessees. What would be the answer, everyone? Which of the following is not correct? It is a direct tax, so this is not an indirect tax. What would be the answer, everyone? Because it is a direct tax. In this case, the correct answer is actually when we talk about income tax. Income tax, what would be the answer, everyone? Which one of the following is not correct? Direct tax, it is a direct tax. It is same for the companies and individuals. No, it's not. What would be the answer? In this case, it is not same for the individuals and companies. It would vary, and domestic and foreign companies cannot be treated as the same thing. In this case, what is not true is income tax is the same as individuals and companies. For you and me, things are not the same. The taxation on one organization and another organization will always vary, everyone. Deduction in respect of donations under such certain funds, charitable institution, etc. is available under ATG, ATCC, ATD and ATU. Deduction which is respected in terms of charitable institutions. Charitable institutions is ATG, ATCC, ATD, or did you know? Then ATD, and then we have ATU. ATG is the one which takes care of the charity working. Okay, so whenever we talk about then in terms of the donations and everything, it is ATG. Done. When we talk about this particular area, when we are talking about specifically in this case, the answer is ATG, everyone. G for ATG for genuineness. When you are being benevolent, you're being helpful towards the people, that is how you can take it. They have certain threshold limits as well, but thankfully in your examination not much has been asked and not much is given in the Macmillan book as well, so you don't really need to worry about it. I think there was a question in the examination regarding ATG as well, so it's an important area to cover. In this case, moving on to the next question, the individuals gets an option to choose between the existing tax rates and the new ones, 100 BAA, 100 BAB, triple B or BAC. When we talk about it, it is 115 BAC. This is the new tax regime which is added, and unfortunately in the new tax regime there is no relief of ATC. The tax burden of the new tax version is something which is costlier. Even you have to pay more tax for the same amount. Done, everyone? This is 115 BAC. Which one of the following statements is correct about deferred tax asset or liability? Deferred means postponed. Done, everyone? When we talk about the deferred tax asset and deferred tax liability, when you pay more of tax today, you have to pay less tax tomorrow. It's an asset. If you pay less tax today and you have to pay more tomorrow, it's a liability. Done. Deferred tax assets should be classified as current assets. They are not current. Deferred tax is basically something which is related to the area of liabilities, assets, or the tax liabilities, and deferred tax liabilities should be classified as contingent liabilities. When we talk about the liabilities in terms of the different areas where the deferred tax is applicable, whenever you feel your income tax is more than your profit as per the Companies Act, then switch towards this area. ठीक है ना? When there is a little, first of all find the differences between the two and specify those differences. Done? Done. In this case, the correct answer is going to be deferred tax assets should not be classified as current assets. This is long term. The benefit or the permanent decline is on the basis of the assets and liabilities where there's a fight between Companies Act and income tax, and it can never be current. It is going to continue as the treatment in both the areas are totally different. Welcome to Officer 24/7. My name is Niharika Valia Bhatnagar. Now I'm with you with the area of AFM. I hope you have been reviewing the courses yet, everyone. I hope you have already seen. Recently, I conducted a special 32-hour special classes were going on now. So I conducted a session on the specific topic of AFM, and in that particular session I have taken over roughly, I believe, a good number of questions, or more than 50 questions are there in that particular session that I took. And it was a session on specific module A and module B. I kept that particular part thinking about that many of you had been working upon these two, especially the ones who were in the paid classes as well. So everybody, I hope you had been reviewing the video, and if you like the particular video, then please go ahead and click on the like button in that particular session. Along with this, please go ahead and check out the specific playlist of this entire AFM series where I've covered multiple chapters. So please make sure that you are utilizing this particular precious time towards your studies in the best way possible. Okay, everyone, now moving on, what are we going to do today? As you already know, We are done with module A completely, module B completely, module C completely. Now we are left with only one thing, that is module D. And module D has just started. We finished the first class with DT, that is direct tax. Then I'm moving on towards the second chapter, that is the second chapter of the module D, that is goods and service tax. Acha, what's the difference between direct tax and indirect tax? पता है direct tax is specifically a tax which is related to the area of whatever you earn, you pay tax on whatever your earnings are, right? The problem arises when we opt for goods and service tax. This is where I went to Domino's to have a pizza. So as soon as I went there to have a pizza, what has happened, everyone? They gave me the pizza, but they charged a certain amount. What was that certain amount that they asked me? They charged me a certain amount, say they charged me an amount of 6.99 for the pizza. The 6.99, the price of the pizza was maybe say 500, and the remaining 199 they connected in the name of GST. Now this GST is levied on Domino's, but it is being collected from me, isn't it? The price and the one who's buying it are two different people there, isn't it? It is that way. So when we are looking forward towards this scenario, this is not something which the organization should be looking forward to, isn't it? But then the point is GST was introduced in 2017. This was an exceptional case which started on 1st of July 2017. Basically what they did is first 3 months were for the transition period, and then they opted for the GST on 1st of July 2017. That's how this particular plan came into being. Now, when we talk about goods and service tax, it is basically a tax which is an indirect tax. Why do we call it an indirect tax? Levied and paid. Levied on Domino's, paid by Domino's, but collected from customer. Difference? When we talk about the area of direct tax, I earn my salary, I pay tax on the salary that I receive. So isn't this a case that we are looking forward towards an organization where it is levied on someone else, but the payment of it is recovered from someone else, isn't it? Done? Now let's move on and talk about the next point. Let's move on towards the questions. Acha, the questions are this. The first is what is the probability of tax evasion considered lower in case of indirect taxes? See, indirect taxes, I earn money, obviously, then in that case it becomes a little difficult for the entire organization to work in a certain manner. You know, matlab, what happens is the probability, if I buy something, then obviously it becomes very, very difficult towards the entire payment of the amount, because selling of that particular thing is done in a certain way. You know, for example, I sold a good, and that particular good is basically sold by someone, but they will definitely collect the particular amount from me itself. You know, indirect taxes are paid directly by the end customer. We don't pay that particular amount, we are paying it through someone. You know, there's a difference. That means indirect taxes are collected by the government without any intermediary. No, government doesn't collect it. Who collects it, everyone? Indirect taxes involve multiple levels of collection, making evasion more difficult. Yeah, it has definitely made evasion more difficult, but what exactly helps them? indirect taxes are only imposed on high individual incomes. No, no. This is basically a regressive tax. Why do we call it regressive tax, everyone? For example, if I levy 5% of GST on the medicines. Now that medicine is being bought by rich, by poor, and by middle class as well. For a poor, 10 rupees is a huge amount. For a middle class, it's okay amount. But for rich, it's the negligible amount. So all these people are paying 10. In this case, what's happening, everyone? The trouble isn't going away, isn't it? In this case, what's happening is indirect taxes involve multiple levels of taxation. Since they involve multiple levels of taxation, who's going to do that specific work of putting in effort? If one party disagrees in terms of making any kind of fraudulent work, then the entire chain would be exposed at whosoever were involved. So that is something that makes GST a little more troublesome in terms of the working, and it is collected by someone else and is on the burden is on someone else. And remember, if the GST is not collected, yes, there are penalties on that. But if GST is imposed and you collect it, but you do not pay to the government, this is where the government can take away everything from that particular organization. There can be GST cancellation, they can be blacklisted, they can face even jail when they are doing all these gruesome and I would say very serious or grave offenses, which are sometimes leading to the fact that they can turn into non-bailable offenses as well. That's the particular part of these kind of scenarios. Acha, now let's talk about the particular next question. Okay, the next question is related to the area of what significant change in the taxation system occurred on July 1, 2007. Introduction of income tax. No income tax was introduced in 1961, everyone. Then implementation of GST, then abolishment of all forms of taxes, or we can say increase in the corporate taxes. Matlab, I would say this was these 2 financial years were really hard on India. The previous financial year, when on 8th of November India had shared the news of demonetization, that was the wrong point. And then while the particular economy was dwindling, there was an introduction of GST as well. These were at that point of time really big decisions, and these decisions definitely had an impact on the stability of the government. But I would say over the period of time we have actually accepted these things, and the changes have brought somewhat adaptability towards the entire country further as well. So technically, when we talk about any specific taxation system, any specific working that we introduce, it may or may not be very easy on the organizations. The implementation was related to the area of GST, goods and service tax. Done. What is the key characteristics, everyone, of IDT? They are imposed on income and profits? No. When we talk about the area of they cannot be shifted to another person or entity, technically it is levied on someone else and paid by someone else. So that really doesn't work that way. They are paid directly to the government? No. They can be shifted to another person or entity. The answer is they can be. It is levied on someone else and definitely paid by someone else. है ना? Done? Next point. How are indirect taxes oriented in terms of their impact on savings and investments? Indirect taxes play a very important role. Indirect taxes reduce the savings and discourage investments. Indirect taxes enhance savings and encourage investments. Really, when we talk about direct tax are basically areas where they specify कि you put your money into so and so things, and this will be turned into your tax savings. Fortunately or unfortunately, GST says no other thing. GST says that if you are involved in supply of goods and services, then you are supposed to pay GST on it. That's the particular simple thing they say. Indirect taxes have no impact on saving investments, and indirect taxes are not mentioned in relation to saving investment. Overall, these are indirect taxes. They talk about the consumption and their explanations to it. So technically, it reduces the savings. It's a regressive tax. A person who is rich, who is also giving the GST the same price. A person who's poor, he's also facing this burden of GST at the same time. है ना? So technically, things are the same. Who is required to file GST returns? Only persons with an aggregate turnover of more than 1.50 crores. Only person opting for composition schemes. Composition levy scheme is a scheme where they do not have to file their returns every month. They can go for the quarter. Every person registered under GST or only non-resident taxable person. GST returns are to be filed by every single person who is registered under GST. Okay? And you can reduce the number of returns based upon the kind of seller you are. Otherwise, returns are to be filed by everyone. The annual returns, the monthly and the quarterly, different returns are to be filed by the organizations to make sure there is no fraud being involved in it. Done? Next question. Which return form is required for a registered person with an aggregate turnover of more than 1.50 crore on a monthly basis? GSTR1, GST3B, and then we have GST4 or GSTR2. The answer here would be GSTR3B. Done? Now let's move on to the next question. Obviously, there are people who makes problems or makes payment in a delayed form, 10%, 12%, 15 or 18. What is the amount of interest that we charge from them? Because if they are late in terms of the payment, then the organizations have to be taught to listen. And then, in this case, the interest is levied as well. है ना? So what would be the answer, everyone? I believe in terms of this scenario, the answer is going to be 18%. In terms of the organization, it would charge the maximum from the people who are making mistakes. Right? Done? The answer is D, 18% per annum. The answer to the next question would be what? Why is registration process more challenging for banks under GST? Registration process is very challenging because for every state you have to get a separate registration. You're not gonna do it by PAN. It is based upon PAN plus the place of birth. That means if I want to buy something, then if I really want to do my business in a particular situation which is outside my domicile limit, then what will I do? Basically with every state you have to really work upon it, na? So when you have to work upon all the scenario, then the state in which the particular organization is working, you know, that particular state becomes the state in which they have to file the return as well. So bankers are exempt from registration, they are not. Next is banks need to obtain separate registration for each time, each state. Then everyone, that is bankers need only a separate registration. Banks only in the centralized, they do not require centralized registration. For every single state, if your address is changing, then this is also changing. Done. So in this case, the correct answer A is going to be the thanks between banks need to obtain between certain registration for the each time. What would be the answer? The answer to this question is they need separate registration. Na? Done. So now let's move on towards the next question. How under GST, how much of the SENVAT credit? SENVAT is basically when you have paid a certain amount of GST, then the same is available uh, in your outputs, in your input services as well as capital goods is required to be reserved. Is it? What would be the answer, everyone? GST ensures that indirect taxes and structures are uniform across the across the country, everyone. Done. Okay, now let's look at the answer, everyone. The answer to this question is in terms of SENVAT credit. It is basically similar to the ITC. You have paid the GST already on some other items, and when you are paying it, you are producing something and selling it. It can be set off. Done. 10, 25, 50, or 75? What would be the answer, everyone? 10, 25, 50, and 75. What would be the answer? 10, 25, 50, or 75? When we talk about the SENVAT credit, it is 50%. You get 50% of it. Okay? SENVAT is basically the credit which is available in the central area, and this is related to the VAT. It was earlier related to the VAT, but on the VAT model only, they created the GST, which is a challenge in terms of assessment and process under GST. Adjudication by a single authority, consistency in performance of different authorities, quick resolution of information or issues, and then impact of impact input tax credit utilization. Basically, this is also helpful because when the audits are going on, when the equity audits are going on, then at that point of time, all the books of the equity shareholders are opened in any case. That is why the people, in terms of the peanuts and in terms of the working overall, this can be adjusted. है ना? Adjustment by a single authority. What is the challenge with GST assessment? In terms of the assessment, what happens is there's an adjudication or consistency in the opinions and quick resolution of issues is basically in the last one is the input tax credit utilization. That means whatever you tax you have already paid, you can get it used. Then the answer to this question is consistency. Always remember it should be a consistent thing among different authorities. It should not be having a mismatch, otherwise we will not be able to compare any of our products with someone else. Okay, na? That is something which we definitely require. Good evening, everyone. Welcome to Officer 24/7. My name is Niharika Valia Bhatnagar, and I'm with you with the era of AFM. What are we going to talk about today? We are progressing towards almost the end of this particular series where we are on the module D and we are done with direct and indirect taxes. Today I'll be progressing towards the area of module D further. We are talking about the costing account. cost accounting today, or it is also called costing. It is basically a specific area of accounting which deals with cost accounting is something which deals with one specific thing, that is the cost. Cost means the amount that you are spending on production. That is called cost of production. It is based upon that part. So let's move on and understand this part. We're talking about an overview of the cost and management accounting. Okay, here comes the first question, everyone. When we talk about the cost accounting, now in your syllabus, they cover the area of not only the basics of cost accounting, but they also talk about the area of the terminologies which are associated with it, even the SI units related to the particular area. We'll be talking about that as well. And management accounting. Acha, management accounting is where management takes decisions. When the management is taking decisions, what is management exactly doing? Management is exactly taking decisions regarding the allocation of the funds, whether the performance is going better or not, whether the organization is growing under their reign, I would say, or not. So then obviously this is the management accounting. That's all about the management accounting. So let's talk about the particular topic in detail. What was the initial perception of financial accounting when business were small and the markets were simple? When business was small and markets were simple, I think gone are those days now. Financial accounting was insufficient for decision making. Financial accounting was considered adequate for management decisions. Cost accounting was immediately recognized as essential. Industrial revolution had no interest on accounting practices. It is just not true. Accounting and they were badly affected by it. But yes, there was one particular part which was wrong. Financial accounting was insufficient. Not really. According to them, financial accounting was everything. Then financial accounting was considered adequate for management accounting. Actually, it was done. Ki whether the organization is making a profit or loss, this will determine whether the manager is good or not. So technically, the answer used to be B at that point of time. Cost accounting was just not recognized at all. And industrial revolution really didn't. They had a major impact on the essential practices of the organization, because cost of production, we had to calculate what amount are we spending on the cost, and then how are we making it work, you know. So that was financial accounting was considered adequate for management decisions. In what way cost accounting utilized during world wars? During the world wars, how was it recognized? To determine market prices, to decide the defense strategies, or setting the prices of the defense contracts, or none of the above. What is cost accounting? Trying to find out the actual cost of production, then this particular answer would be related to that particular part itself. Setting the prices for defense contracts, we had to choose the particular prices that we were choosing. Well, technically this particular thing is impacted by not only industrial revolution, but also the world wars had also impacted it. Many of the organizations grew during the period of world war, and many organizations died during the world war. That's one of the realities of this specific area. Okay, so the answer is C. Setting the prices for defense contracts, everyone. Next question, what is the primary objective of cost accounting? To maximize the objective profits, or to determine the market price, or to ascertain the cost of each product or service, or to simplify financial accounting processes? What would be the answer, everyone? What is the primary objective? It is not about maximizing the profit. They were very, very simple. You know, when we are talking about this specific area, to determine the market prices, not really. They were never worried about the market prices. They were worried about something else, to ascertain the cost. That is the point, because financial accounting has nothing to do with cost. Financial accounting talks about only one thing, that is whether the organization is having a profit or facing a loss. That's financial accounting. Rest, there's nothing the financial accounting does. Okay? And now let's move on to the next point. To ascertain the cost, I need to find out what is the cost. Hannah? When we talk about this specific area of cost, it is very, very important that we know about the costing altogether. What does this mean, everyone? Before I want to sell something to you, I need to know what is the costing in terms of my books of accounts so that I can charge you with a good profit. Why would a business knowingly would go for losses? Isn't it? What does the cost accounting help decide regarding products? Assigning priorities, maximizing profits, reducing wastages, or all of the above? What does cost accounting help? Cost accounting helps in many things. It reduces the area of costs. Cost allocation is easier, so maximizing the profits is one of the effects that happen. It reduces wastages, obviously, because you're noting down the price of each and everything, even the losses. And then when you know these are the losses, then you just don't want to face those losses, isn't it? And the last one is assigning the priorities. Everyone, if I know one particular area, acha, there was a specific rule called 80-20 rule. The 80-20 rule is related to the area of 80% of the income comes from 20% of your stock or 20% of the thing, right? That particular part, that particular part is related to this area only. Now, this is called Pareto analysis. Just thinking about the name. The name is called Pareto. According to him, why don't we choose the particular areas where we can earn maximum? And if 20% determines our 80% income, that 20% is super important for us, isn't it? So it includes all of the above. Tanji, financial planning is a tool used in what? Where is it used, everyone? Okay, the financial planning is a tool of financial accounting, cost accounting, management accounting, or all of the above. When we talk about the financial planning, this is looking into the future and deciding what amount would be required at what point of time. When it's a futuristic approach, we relate it to all these areas. But we specifically talk about the management accounting, where they are going to use the money, the decision making, and everything is settled as per management accounting. The cost and accounting standards have been issued by Institute of Chartered Accountants of India, Indian Standards Organization, Ministry of Corporate Affairs, or Institute of Cost Accountant of India. The cost accounting standards, CS. Acha, SAS is very important when it comes to the production area. Why is it so important? If I don't know what would be the amount of profit that I can earn, how will I work further? If I really want to work further, I really need to know what is the uniformity in terms of the cost that is there, which is in the entire industry, not only in my specific area, but in the entire industry, we'll find it. So in this case, the answer would be Institute of Cost Accountants of India, ICOI. Instead of CO, they write it as CO cost because this is ICAI. These are very similar in terms of name, so that's why they had to change their name a little bit so that we can understand. The Institute of Cost Accountants of India, they gave the particular cost accounting standards. Okay, done. Achha, everybody, I hope you are liking these sessions. Please go ahead and like this particular session because it is super duper important that we receive all that appreciation from your side. The little recognition that you give definitely takes a long way in our work there. So please, if you like this particular session, then share it among your peers. And one more thing, everyone, our sale is live. That means from today, actually I didn't start today, but we can review the particular courses. What you can do is, before I proceed further, just showing that part, you need to go on to our website, that is www.adda247.com. As soon as you will go to the website there, can you see, you can see JIB and CIB. In this area, go on to the area of JIB May 2024. You will find our JEET batch as well as Victory batch. These two batches have just started, so you can look forward to it. They would be starting from 6th of February, everyone. So, or you can take up the JB Mahapack as well. Mahapacks are the best things to happen because under Mahapack you get the live batches, recorded classes, bilingual English medium, Maha marathon, mini marathons. Everything is included in it. The hard work involved in the Mahapack is way too much, and once you buy the Mahapack, you don't even have to pay single penny further. But the benefit is it is for 12 months. Use the code Y541 and you will get 79, or here you can get 80% discount. You will get it for 6298.95. Use 1% more if you are using our app. Use the coins and then you will get further discount. Okay, no? So that would be around this would be near about 62 rupees. Technically, if you really want to go ahead, then be very sure, and then go ahead with it, because ultimately this particular pack, once you buy, then you don't have to buy anything else. There are so many resources already added for you in this, right? So use the code Y541 and choose the particular area. Done, everybody? So we were at Institute of Cost Accountants of India. Done? Now moving on to the next question, everyone. What is the one of the advantages of cost accounting in decision making during world wars, developing strategy for economic growth, determining the price of the goods and services, or none of the above? When we talk about the patriarchal side, then we can say decision making during world wars was very important. Developing strategies for the economic welfare is also very important, but determining the price of the goods and services. Now, this is the part which is to the area of advantages of cost. Done, everybody? So in this case, what's going to be the answer? In this case, since we're talking about cost accounting is very much sorted. It is there to determine the price, be it the product or the service. In India, which organization issues the cost accounting standards? Acha, we are done with this question. Is it ICAI, SEBI, RBI? It is ICOI. OAI, that is Institute of Cost Accountant of India. Done? Okay. Now moving on to the next point, what is the main difference between financial accounting and cost accounting? Financial accounting and cost accounting, are they same? I really don't think so. They're totally different from each other. Financial accounting is all about money, money, money. And cost accounting is all about the cost. Right? They talk about cost cutting, they talk about other areas. Financial accounting is basically into the area of where you are learning for more and more um, decision making in monetary terms. So what is the main difference between the two? And everyone, financial accounting is voluntary, while cost accounting is statutory. No, financial accounting is never voluntary. Financial accounting focuses on internal transactions, while cost accounting deals with external transactions. Financial accounting reveals profits and losses, while cost accounting focuses on unit cost and profitability. Then is financial accounting emphasizes planning and control, while cost accounting aims to meet statutory requirements. Since the cost accounting is totally related to the area of cost, financial accounting talks about only the profit and loss of the organization. So then the easier answer is answer number C. Done? Here comes the next question. What does cost accounting deal with in addition to uh, okay, let's look forward to what does the cost accounting deal with in addition to actual figures. It actually calculates the actual figures now, in terms of points and in terms of gauges the preciseness of these things happen. So external transactions, internal or budgetary control and estimates, or the last one is statutory compliance. No, when we talk about the cost accounting, then in this case, when we talk about the cost accounting deals with additional actual figure, it is actually budget control. We have an estimation. This is the amount that we can have in future, more or less, and then we make an estimate about it as well. You know? Now, what is the process of primary focus of management accounting? Measurement of external transactions, reporting to regulatory bodies, providing information to of for managerial decision making, or compliance with statutory requirements. Done. Done. When we talk about the management accounting, it deals with the decision making process now. When we talk about decision making, the allocation of the funds and everything is done through the management accounting. You know? So providing information for managerial decision making, they can make the decision, but the routing of the particular process will go through them. Then everybody providing information for managerial decision. Done everybody. Now let's move on to the next question. According to CIMA, London, what is the purpose of information presented in the management accounting? No compliance followed, no statutory rakes and parties, and then we talk about the area of safeguarding the assets and external stakeholders, reporting or compliance with tax authorities. Then what would be the answer? External stakeholder reporting or compliance with tax authoritarian? When we talk about the particular area of management accounting basically safeguards the assets because allocation is done through it now. All the decision making and everything is given to the different people based upon this only. So this makes sure that we are safeguarding our assets and we are actually keeping our liabilities under check. So let's move on and talk about the next question. Which tool helps in determining the channel of distribution and pricing of products? Break even. Break even is basically if I put 10 rupees, I get the 10 rupees back. Right? Then, is it break even analysis, marginal, or Stanford? That is standard, as well as last is financial. What would be the answer? Break even analysis basically means if you put 10 rupees, you get 10 rupees back. Marginal costing is a costing which is related to completely the variable cost. Standard costing has some standards which they set up in financial planning. As we just learned, it's basically a process where you are looking for the budgets which you're getting in future. Answer is financial planning, everyone. Suda 24/7. My name is Niharika Bhatnagar and I'm with you with the area of AFM. And we were talking about cost accounting. Na? So then we were talking about costing methods. In costing, we have different kinds of methods. The methods varies from when we are working on production, when we are working on service, whether we are working towards producing a thing for the life of that particular asset, or we are just producing new things every now and then. For example, if I produce toys, then obviously I would produce okay, if I'm making a car, then probably then I'll make a pink car as well as a blue car, because what would I do? I would like to sell it based upon the gender, right? That means for the girls there would be the pink car, for the boys there would be the blue car. So technically, when I'm trying to sell that particular toy, I would keep all these things in mind, right? So here comes the module D. The kind of costing that is used in this specific type is called batch costing. And the other type is called, number one is batch costing, second one is after batch costing we have process costing, under which we undergo multiple things. That is called process costing, where we have process 1, process 2, process 3, process 4, and then the final good is ready. Then batch costing, process costing, next kind of costing is called unit costing, when one particular thing is being made and that is not even changed at all. For example, one of the best examples for this is cement. Cement factory, they don't really change, they're just making that particular thing, right? So when we were talking about it, first one is related to the area of job costing, batch costing, but job costing is also left. This one is called job costing, where we are talking about a specific customized job. Unit costing is when we are making one particular thing for life, for example, cement, for example, sugar, right? So once we're done with this, what else is left? Job costing is where we are doing something, some kind of costing which is totally specialized towards one particular thing. For example, making of the red chair, that is basically part of job costing, right? Okay, now there's one particular related to the construction, which is contract costing. So these are all the different kinds of costing which are used in different um, productions. Based upon this, today we are going to talk about, I think, multiple of all these kind of costing. What is the primary purpose of contract costing? To maximize the profits, to minimize costs, to separate a certain costs of each contract, or allocate overheads efficiently. What's going to be the answer, everyone? What is the primary purpose of contract costing? When we talk about the contract costing is exclusively related to one thing, that is long-term construction based contracts. For example, building a house, building a bridge, building a freeway, highway, all those things are covered in this. So when we talk about this scenario, to separately a certain cost of each contract, we do this. Because if I'm a contractor, then at one point of time, I might be involved in making a building along with, number one is building, number two, I might be involved in, first is building, second is I might be involved in making something else as well. One can be building, second can be at one point side making a building, at the other side we might be making a bridge, and we might be making a highway, right? Or we might be making a toll tax, toll for the taxation collection. All those things can be done at the same time. No? There are multiple things that we can take up, so that is covered in this area. What type of contract is suitable when the exact cost cannot be estimated at the start of the work? Sometimes we just cannot find out what would be the cost of it, so that we cannot quote the price, because if I quote the price to you already, and then I would be stuck because I cannot charge even a single penny more than that. So how do we deal with this? Fixed price. No. This fixed price is definitely going to cost me a major problem. This can cause losses. Cost plus, it can cause cost plus contract can, this can be helpful though, because in this case you will say whatever the cost would be, just add 10% to it or 20% to it. That would be the portion of my profit. You pay this and this is my profit. That is something you have to pay again. But again, this part is something which is compulsory and this part is optional. Actually, this part is for the cost, which you in any case have to pay. This part can be negotiable and I can increase or decrease my profit based upon the negotiations I have with the person. Time and material, the next part, and the lump sum. The correct answer is cost plus. Lump sum means giving all the money at once. If you're giving all the money at once, do you really have an option? Nope, you won't. That's one of the areas where we talk about this. Contract costing is not something which is very difficult to understand. Rather, it is beautifully explained when it comes to the entire area. In contract costing, what is the primary purpose of the retention money or security deposit held by the customer? Acha, everyone, do you think whenever we hire some laborers to do our task, then we would just give the entire money to them at once? Well, this is what I've always seen, that whenever laborers are working now, we give them money on the basis of the work they're doing every day. Either on the basis of the everyday work or on the basis of the total work they're supposed to do. है ना? We just don't give the entire money in advance and then let them do the work later on. What will happen in this case? If we actually allow them to do the work as and how they want, there is a major risk involved. What is the major risk, everyone? Maybe they'll just take the money, but they won't work or give the particular quality. That's why we are going to always retain a part of the money, isn't it? So, in the contract costing, what is the primary purpose of retention money in terms of security deposits? To compensate the contractor for shortcomings, to maximize the customer's profit, to cover the contractor's overhead, or to encourage the contractor to finish quickly. This is based upon the area of execution. Whatever portion you will execute, only that part is something that we will check. Otherwise, we won't check all the things, because this will make our entire work wrong. Why? What if the person, the work we have given to that particular person is not good at it? What will happen in that case? Then if we give the money upfront for all the construction work, then that would cause us a major loss of funds, and that is not good, right? So this is the point regarding the retention money. Retention means we do not pay the money, all the money upfront. We keep a little part of the money with us. How is the progress billing determined in contract costing? Who typically certifies the stage of the work completion? Based on contractor's estimate and certified with the customer, contractor, architect and engineer, then estimate as well as surveyor. Everybody? What's the answer according to you? Chaliye, then let's move on and look at the answer. The correct answer to this question is the contractor's estimate and certified by the customer. Obviously, the contractor will give us the estimate that this is the part of work which is done, and the certification would be done by the customer first. कि ठीक है, this part is done, this part is still left. How is profit on incomplete contracts calculated, and why is it necessary to recognize it during contract execution? Profit to date, or cost of work divided by total estimated work contract into estimated contract profit to avoid disputes with customers, total estimated profit cost divided by the cost of work into the estimated work contract profit to maximize the profits, profit to date, total cost divided by estimated divided by cost of work completed to comply with the accounting principles. What's going to be the answer? The correct answer to this question is profit to date. How do we calculate your profit till date? It is based upon the work which is already done, okay, divided by total of contract cost, whatever would be the total, and we multiply it with the estimated contract profit. Whatever estimated profit we can make up, that is to be taken here. Done. Now comes the next question. How is the profit to date calculated on incomplete contracts? When we talk about incomplete contracts, total estimated contract divided by cost of work completed multiplied by estimated contract profit. Cost of work completed divided by total estimated cost contract and estimated contract cost or cost of work completed or total estimated contract profit. What's going to be the answer? How is the profit to date calculated on an incomplete contract? Okay, when we talk about an incomplete contract which is not fully done, and obviously we will not pay for the entire work. We would be paying only for the work which is actually done. The rule is, because if I give the entire money at once, probably the person will not do the work properly, which is very, very dangerous for us, because if he leaves the work in between, how will we handle the entire situation? You know, it's obvious if we are into in the mid of completing our architectural work and all, someone has taken up that particular job, and if he leaves in between, who will take it up, and in how much time that work would be done? You know, so the answer is cost of work completed divided by total estimated contract cost multiplied by estimated contract profit. What is the characteristic feature of production process in process costing? Customization of products, non-continuous production, standard continuous production, or one-time production cycles. Characteristic feature of production process. Production process is basically a process which goes through multiple phases, and obviously always remember, in terms of process, this is under process, what happens is one particular thing, when done, it leaves for the next process, then goes for the next process, the process continues. You know, there we have a standard and continuous production. Whenever we have this, we are looking forward to this. For example, paper making, it happens in that particular scenario as well, isn't it? Okay, now comes the next question. What is the primary difference between weighted average cost and the standard cost in process costing? Weighted average cost involves assigning standard cost to the production units, or standard cost involves adding all costs and whether preceding or the current one. Weighted average cost use actual cost, while standard cost uses estimated cost. There is no difference between the terms, and they are same. When I say weighted average cost and standard cost, they are not the same. They're never the same, rather. When we talk about the standard costing is a totally different scenario. When we talk about the standard costing, what we are trying to do is uh, we are having weighted average cost that use actual cost, while standard cost uses estimated cost. You know, the answer is actually C, because weight uses actual cost and then it puts a weight into it, and we give importance to multiple things now. Technically, that's why. In this area, we use actual, and while in terms of standard, we set a standard. This should be done. If I tell you we should be meeting at 7:30, and there is a should. At what point of time it is feasible for you and me? That would be the actual thing. So weighted average cost uses actual costs, while standard cost uses estimated cost. When is the FIFO costing method typically used in process costing? When there is no standard costing system, when the cost changes from one process to another are very low, when there are ongoing and significant changes in product cost, and when there is no need for improvement in costing account accuracy. What's going to be the answer? FIFO is first in, first out. When is FIFO used? I believe when we have a particular I think we should be using it in terms of when there is no standard costing system is not definitely the answer. You have a specific system only, then you use FIFO. FIFO is first in, first out. Whatever comes first would be used first. ठीक है ना? So that is the first thing, and the cost changes from one process to another is very low. No, this can also not be the reason. The right answer should be this: when there are ongoing and significant changes. Matlab there are major changes coming in that particular thing. That's why it is important that we note it down accordingly. Done? Okay. Now let's move on to the next question. What is the formula for the used to calculate the cost of one unit in production process after adjusting the normal cost? Cost of one unit is equal to total sales minus sales value of the scrap divided by the inputs, or total value, total cost divided by input units, total cost minus sale divided by input minus normal cost, or the last one. The correct answer in this question is C, everyone. C. Why C? Because everyone, in this case, we have a certain amount of units which goes into normal loss. Total cost minus scrap value, this is the actual cost that we are left, and from the input, total input that we have got, we remove the normal loss, the loss which is bound to happen. For example, if I am transferring petrol from one organization to one place to another, the petrol is highly volatile liquid, so it will evaporate in any case. That kind of thing will always happen. So that's the answer in this case. Okay. Before I end this particular session, everyone, first of all, please like this particular session if it was helpful for you. Number two, I hope you know that our sale is also going on, and if you haven't utilized the particular opportunity to buy our courses, then what are we waiting for, everyone? This is the perfect time. You should go ahead and purchase our courses right away. Okay, what you need to do is go on to our website, that is www.adda247.com. Let me show you where to go exactly. This is our website, www.adda247.com. As soon as you reach the particular website, what you need to do is go down and reach to the area of JIB and CIB, go on to the area of JIB May 2024, and here are all the courses which are required for us. JIB Mahapack is the best option for you because this is something which would turn out to be the best option. Why do I say this? Bilingual, English medium, both the courses are available. Okay. Then not only bilingual English medium, test series is also available. Then along with this, the previous batches, current batches, and upcoming batches, everything is available. Validity is going on for 12 months. You have to pay just 6298.95. That means around 568 rupees, roughly, less than actually that you will have to pay for this per month. So your per month cost is very, very less. This will help you to get all those particular things that you need for the examination without paying a single penny further, because revision batches are also included in this. So do not let this beautiful opportunity pass by. Go ahead and buy this particular course right away. Right, so you can use the code Y541. This will give you a discount of 79% plus 1% if you're using the app. So hurry up and check it out now. Thank you everyone. We'll be meeting tomorrow at the same time.